I'd rather be right on 9 out of 10 trades where I don't get very much drawdown than, play this game of probabilities where it's like, well, it's at this level. It could drop off this level or it could rise off this level. Like, I'd rather have the confluences match up with my trade so that I'm more confident in putting 30 lots, 40 lots, 60 lots on this trade. And hey, if I lose, I lose, but there's still a lot of confluences on that trade.
Welcome to the Trader Society podcast. I'm Grant Hardy, and we got Derek Vandy here, and we got some really interesting questions that we're going to be going over today that, mistake me if I'm wrong, that our audience, our followers have given us.
Yeah. A lot of them are talking about signals and stuff.
Oh, okay.
So, and
all right.
all that. So,
All that.
we're going to stray from that. There is one really good question.
So we're going to answer one question today.
Yes.
Okay.
But we also kind of asked at a weird time.
Okay.
A lot of the same time. So we're gonna go over like how to manage your exposure in the market. And this comes from like not over leveraging on a single trade or not putting all your eggs in one basket in a single trade.
Right.
And I think that, Grant, you should take honors.
Honors. All right. So, yeah. So it depends, I would say, on the approach, right, with the trade that you have.
Yep.
Now if you have like your main trading account, you're like, this is the setup, and you're on US 30, and you have, let's say you have a $20,000, $10,000 account. Not speaking from experience, just as an example, and then you go and you drop, a standard or $1.50 on US 30, and then and your money's gone like that. That's bad. Or if you had, an approach with the whole Wyckoff thing, right? Put money in an account, this money in this account is going to go towards this trade, then I think that's different. So it depends on, your goal and where you're going with that.
Let's say that we're just trying to build an account. This is your main account. We're not trying to.
Obviously,
Yeah. Let's go with that route on this one.
Right.
Where I'm going to say from experience, every time that I've really messed up, it's because I've put too much exposure into one setup.
Right.
And it's usually a setup where, like, for example, the pairs that end in JPY, I think it was last week.
Wyckoff finished out.
Yeah, Wyckoff finished out.
Played one of the last phases.
Yep, exactly. And one of the things with that is you'll see these big moves, and a lot of the time frames, they'll be way overextended.
Right.
And people usually, myself included, have done this where I enter these trades far too early when maybe even the news is still going on, driving price down or price up in these moves.
Right. So I don't know if you remember, I think it was 3 weeks ago I messaged in our group chat in the Trader Society group chat. I was like, hey, start stacking in yen sells. Remember that? And y'all were like, no, I told you it was rise. I was like, I know, but this is the last phase. This thing's about to tank. And then it just, some candles, 200 pips in a candle, some like crazy stuff. And it all depends on your understanding and approach. Like you guys were right? And I was wrong at the moment, but I was right. So it depends, like, are you stacking in this position for a bigger move for your understanding of the market, or are you playing it on this rise that you guys called? We were all right, but I knew that the last part of this Wyckoff was about, the next leg down was coming.
Mm-hmm.
So it just depends literally on your approach and your understanding of the market. And this is where people differ, and this is where strategies work, and they work for some people because they see it one way, and they work for some people because they see it the other way, right? So you and Anthony were like, dude, what are you talking about, right?
Mm-hmm.
Like, this is scary. And I'm like, okay, well, this is going to play out because of this, right? So it's just, we all see the same things, but I was ready to start stacking in for that. Like, I saw a drop coming. You guys weren't looking for that. So therefore you didn't see it. But like,
we were looking at the smaller time frames, like maybe the 4 hour, 1 hour, something like that, where we saw more rise left in that trade.
Right.
Where ultimately,
right.
if you're looking at the monthly, weekly, It
Right.
did what it did.
Right, it did what it did. So it literally all comes down to your understanding of what you're doing. And, like, I don't think it's a bad idea because everyone says, risk 1 to 2, maybe 3% a trade. It depends on your approach to the market, I think, and your understanding. Some people 5%, some people 10%. If you're a 70% trader, and you have the history to back it up, don't just take 10 trades and be like, oh, I won 7. But if you have like, a year or 2 or 3 years of history, it might not be a bad idea to have maybe not as your main account, but a different account to where you can really test, can I have my main account be where I risk 10%, but I'm going to win 7 times and my R to R is, like a 1 to 4 or 3, to 5, depending on your strategy. So it just comes down to what do you understand about yourself and your trading and your strategy? If you don't understand it, then you may get lucky, but none of this is going to work long term. For sure.
And in a way that I think that you can go about this, right? So maybe you're on the monthly time frame, the weekly time frame, which it takes longer for these moves to play out, right? Maybe what you do, and if you're gonna risk that 10% on that account for just that one trade, what you'll do is maybe say, hey, I'm gonna enter 20 times in this trade, but each trade I'm gonna enter 0.5%. So that you don't get yourself in a situation where you're like, all right, I'm risking 6% up here, 2% down here, when the smaller time frames are going to be going against you, and ultimately it could burn you pretty bad.
Right.
So what you do is, like, maybe you have a really good entry, like that trade you had, it was AUD JPY, right?
Yeah.
Okay, so you entered pretty much at the top, right?
Right. When everyone was saying it's still going to rise, but again, it's depending on your approach, right?
For sure, exactly. So that's where it's like, okay, so you had the Wyckoff on that, the setup like the back of your hand. You entered at the top at a pretty good position size.
Right.
Now, this is what I would recommend doing if you get that good entry. And you're going to just keep kind of entering based on the monthly or weekly time frame, or daily even. Maybe have that top position that is going to be the good entry.
You don't know that all the time.
You don't. No, of course not. Of course not. But let's say that you're confident in this trade. Have that top position be the position where you enter 3%, and then the rest of those trades just kind of dollar cost average in, so that if it does go against you a bit, you're still protected in a sense that you can continue to enter trades when it actually does do the full monthly or weekly time frame move.
Right.
That's approach that I would use on that type of situation, instead of being like, all right, I'm going to enter 4 times, but it's all going to be pretty close, and it's all going to be 2.5%
for sure
each trade.
Yeah.
You know what I mean?
I entered the trade and it took I had 2 positions at the top, probably 15 pips within each other. And then I waited almost 2 weeks before I entered again.
Yeah. See?
So like you have to, especially with something like what happened with AJ. I waited 3.5 months to even enter.
Yeah.
And watching. So I had to be patient. So like, another thing that I even learned on that trade too is like, just as patient as I had to be to take it, I needed to be just as patient to let it completely play out, because I didn't catch that drop that I was telling everyone a couple weeks ago. But so like, that's another thing is, are you in too heavy to where you feel, uncomfortable, right? And is it going to ruin your foresight or your understanding of what you already have? Because if you're not comfortable in the trade, then your emotions will get you every time, or the market will, right?
Exactly.
So it's just, again, it's all a learning process. Like next year, I'm only going to take these Wyckoffs. That's it.
For sure.
I'm going to probably take 10 to 15 trades
There's been
a
ton of them lately.
I know.
A ton of them.
But I want 4-hour, mainly daily Wyckoffs that form, for, accumulation and distribution. But I don't want to take that many, because the risk to reward is so big,
Yeah,
and it's all patience.
exactly. Let it play out, let it do its thing. And after the initial entry, when you're in profit, that's where you really have to get patient because you're excited. The emotions come.
Mm-hmm.
Wait for a good lower high or a higher low. And then, enter off of those if you're going to keep entering. Like, don't just fully stack on the way down, especially when it's that monthly time frame
Right,
move
for
because
sure.
there's going to be, pullbacks.
Going to be, there's a lot of movement in between a wick, the top and bottom of a wick,
Yeah.
especially on, 4 hour candles. Like those are big movements. Even though price came down here, it touched here, that doesn't mean it's going to finish up here.
Mm-hmm.
The market still has to move take everyone's money, right?
Exactly. And then another thing you can do to kind of protect yourself or at least like be aware of that trade that might be one of those higher time frames is, look down the road and see, maybe there's red news on JPY pairs 3 weeks from them.
Mm-hmm.
And look what that news is going to be and, figure out, oh, is this going to drive the market?
I read something the other day, and I don't know if it's true, so like don't everyone quote me on this, but I think it was last week I read that if interest rates go to 3% or just under 3%, I don't remember exactly what it was, but Japan will be spending 100% of like its receivable income from taxes on its own debt, or like it will succeed its interest payment on debt. So they will be completely like bankrupt because they've had such a deflationary problem for so long, and they've been trying to combat it by money printing and government buying debt and central bank buying debt, and anyway, stuff like that will make a currency tank. But then you go look at the chart, right, and you see this Wyckoff setup, and whether it's news or whatever it is, like it all is playing out no matter what. That's why I've never really paid attention too much to news, because at the end of the day, I feel like the charts don't lie.
The charts don't lie, man. Just like right now, we're going to see Bitcoin hit 12.7 here in the next, I'm saying 1 to 4 weeks. We'll see Bitcoin hit 12.7. There's going to be some news that comes out on crypto. It's going to drive the market down.
Everything's going to tank.
And, you can just tell by the markets how it's looking. The patterns don't lie.
Right.
You know?
And see if you can combine, and that again, like if you're just to go into fundamentals, right? Even further, that you understand what you're doing, you can read the charts and see that coming, but then you can also, understand economics is like, oh, they're making it more expensive to borrow money. Okay, well, that means prices are going to come way down on everything across the board. So people think that there's going to be this normalization in the markets, not saying I'm right, but just from my understanding of how money works and interest rates work, right? It's going to crash the price of everything. Bitcoin, the Dow, S&P, real estate, except this time, not trying to get too far off topic, but
no, this is good.
But this time, it's going to be more expensive. Like our government's going to have issues. People are going to have trouble with, credit card, interest rates are going to go up on those payments. So learn the charts, but also learn the economics, but it again, it's just understanding your approach. And even if you're right, but you somehow are wrong, right, stacking entries, like don't stop, like understand what happened, but do it right. Understanding your approach is the biggest thing I think you can do.
Yeah, for sure. Understanding your approach, and then just not over risking on just single positions.
Yep.
Let yourself take those smaller positions in between the initial position. But yeah, I mean, 2023 is going to be a scary year for, I think, everyone as far as, I think we're going to see a pretty bad recession. I think we're going to see a lot of foreclosures. People are kind of on their last cusp right now of like, oh, I'm living paycheck to paycheck, hardly being able to make my mortgage. And,
right.
It's only going to get worse.
Yeah.
It's scary stuff, but, that's why, honestly, it's a blessing to learn this skill for that reason, because, the markets are always going to be moving.
Right. I bet the euro collapses within the next 2.5 years.
Yeah, I mean,
I bet it collapses.
I think they're gonna go to a new money system. To be honest, they're gonna have to.
The what is it? The pound and the U.S. dollar are the two oldest fiat currencies.
Mm-hmm.
In existence, and I think history, if I'm not mistaken, right now.
Wow.
And every 50 years or so, there's a new currency in place. So far, we go back to gold every single time, right?
Mm-hmm.
Through the last 5,000 years of human history. But, this time we have Bitcoin, we have, digital banking. Is it going to be fiat again? Is it going to be Bitcoin? Is it going to be gold backed? There's a lot
I was just watching this podcast on Gary V's dad, or not Gary V's, Grant Cardone's dad.
Yeah.
And he's like, yeah.
Gary, is his name Gary?
I want to say it's Gary Cardone.
Yeah.
And he was talking about how he was trying to pull money out of the bank, like $100,000 cash out of the bank. And they were like freaking out about it.
Yep.
And then at another time, he tried putting $1 million cash into a bank, and they had to shut the bank down.
They didn't even want it.
They didn't want it.
Yeah.
They were freaking out about it. And he was just like, man, this is
they don't even want the money.
This is why Bitcoin's so big, though. You know
right.
what I mean? It's
I have a funny, relatable story to that. So at the time I was living in Colorado, right when the whole COVID thing started happening, I was keeping up with it, and I could kind of see the signs of, I felt something weird was coming, right?
Yeah.
So I went to the bank one day, and like, hey, I want to pull out $30,000 cash. Lady looks at me like I'm insane. Not to mention I'm 20, 25, 24, so I just look like a young kid. I didn't have a beard then or anything. I didn't have tattoos, a beard. And she looks at me like I'm insane. She's like, well, we don't have that kind of money. She's like, we probably have I think it was $1,800 or $2,000. She's like, that we have on hand, and she's like, we're not going to have any cash after that.
What?
And, people were starting to pull their money out of the banks. And I talked to the branch manager, they're like, okay, yeah, we'll accommodate this for you. We'll order it. Go back. It was 5 days later, I think. I go back to get, and I compromised. They were like, we're having a hard time ordering cash. Even, they order it from the Fed to get it in. Well, I ordered this money, right? And I think I ordered $20,000. I go there, they still wouldn't give me the full 20. First of all, they disrespected me when I walked in. Even worse, the second time, she literally laughed me off. I'm like, I have this letter showing I ordered this money. It's in your system. I want what I ordered. And I think they only gave me $12,000 total. They still wouldn't give me the full 20. That made me that scared the hell out of me.
That's scary.
Trading will always be around. You'll be trading something, and the rules and fundamentals apply, but it might not be, U.S. dollars. You might it might be something different.
Yeah, that's the sad truth. But nothing we can do about it.
No, there's nothing you can do about it. Just be aware.
Yeah, exactly. Protect yourself. That's why it's nice to own some crypto, just in case, because, that's why I do. Yeah. It's right now, I think it's got more room to drop, obviously, but, it's still nice to have some in order. You never know when banks just won't answer you.
Well, if crypto drops, that's not your spending money.
No, exactly.
It shouldn't be.
And it should be a quick drop. Honestly, I'm thinking 12.7 and just right back up.
Yeah, people are going to buy it up, And
I'm sure institutions have huge buy orders down there.
Oh, yeah. If you don't, this is a good example of taking advantage of, positions. And if it drops, how are you going to have something that was $70,000 that has a huge marketplace, online, on the internet, in the world? How are you going to say, oh, well, it went from this price to this price, way down here, 70 or 67, down to, 10 or 12, wherever you say it's going to go.
Mm-hmm.
How could you not want to at least take some sort of risk? Because you want to buy it at 65, and it goes up a couple
right?
grand. You're like, I made some money, and all of a sudden it hits 60, and you're panic selling,
Yep.
right? But this is a good example of like averaging into your position. But if it goes that low, I mean, honestly, I'll be buying on the Forex market and trying to hold for
right.
a long time.
Well, it's on a nice trend line on 12.7 as well. So haven't hit that trend line in a long time. So I know we'll see some rejection off of it. And just the way that my chart looks, it looks like it's going to go down to that. Now, news could drive it down lower than that, of course. But I still think it's going to be very quick.
Yeah.
We could get a wick on 10, and next thing you know, that might be our new low. But I mean, it's just all a possibility.
Right.
I'm still I see that happening.
Right.
Maybe not 10, but 12.7 for sure.
Right.
It's just one of those things.
Well,
but
what broke 20 and consolidated?
yeah, it's been at 16.5, 17 for the last like month or two at least. So it's just, and the reason why I say this is going to happen is it's hanging on a ledge on the 8 moving average. And anytime it does this, especially with the way I trade, once it hits that 8 moving average and kind of hangs around it,
like the more it stays there, the weaker that spot is.
Yeah, and then we're just going to see this big drop off.
I think so too.
It happens on every pair that it does this to. You'll see consolidation to that 8 and then just
tank.
Yeah. So it's kind of cool stuff to think about, it's not, there's a lot of scary stuff going on, but the best you can do is just protect yourself with either things that are, like Bitcoin,
right,
crypto in general,
Well, I think what's important too is, we just had so much, prosperity over the last, 10, 12 years from 14 years and, since 08, and they dropped interest rates and they created another boom, right? These central banks, you had so much time to create a lot of things for yourself to wait. Every time this happens, it's a transfer of wealth. So people our age, younger, this is a point in time where you can really catch that next train. I don't know how many times after. I think there's another wave coming of prosperity, at least for us.
Yes.
But I don't know how many times after that it can keep going.
This, if you have some money right now, you're looking like you're in good shape.
Yep.
But the people that have real money are going to become extremely wealthy on this. They're going to be buying up all the houses. We're going to become a nation that is renters, and because all these people are going to be buying up the houses, and no one's going to be able to afford it because they're going to just be doing it cash because these houses are going to go down again. And that's the way I look at it anyways.
Houses, you got where everyone rents everything and no one knows anything.
Exactly.
Look at Uber, look at Airbnb, look at, I guess homes. What was it? I think it was Chinese companies, and there's another big corporation, but they're like the number one buyer of homes in the U.S.
Yeah, exactly. Land, Bill Gates, these Chinese companies, they own majority or like the most land. Right. I think in the U.S. or something.
Yeah. So with all these interest rates rising and everything, and it's affecting the currency markets, it's affecting equities, it's affecting real estate. There's going to be just the natural order of things is big deflation first. There's going to be, I think, massive deflation. Bitcoin's going to, I bet it goes below that.
Yeah, definitely.
I bet it does. Stocks, everything is going to over exaggerate because you got to remember everything got overbought. So the exhaustion, now everything with interest rates and the amount of debt people hold and everything, it's going to most likely over exhaust the other way. Right? So I'm not saying try and catch the bottom or anything, but what I'm saying is because of all the money printed, right, everyone's running to cash. As interest rates rise, people want cash. They want to hold it in the bank because now all these risky investments that made sense with low interest rates, now the interest rates are high. Now they want to sell it and hold the cash because those prices are going to come down. Well, now you have all this cash on the sidelines. Now when things come back, there's going to be a period, I think, of not just normalcy, but like, wow, everything is great. But as all that cash comes in and people spend money, making money, there's something called the velocity of money, right? Where it's how fast a dollar exchanges hands throughout the economy. Well, as people make more money and they're spending more money and they're making more money and they're spending more money and there's extra money on the sidelines and interest rates are lowering, I think we're going to see, that's whenever we see the shift of, like, I don't think we've seen real, like, 10% inflation. I think 80, 90, 100% inflation. If you look back throughout history, I know I've talked about this on this podcast before, but the Weimar Republic with, ancient Rome, all these different civilizations where their currencies collapse, right? Those are just two really good examples that we can relate to here. As people spend money on the back end of this overexhaustion of selling, and that they're going to lower interest rates, I think, to negative, where because they're going to charge you. And another reason I think this is going to happen is because they're going to go negative on interest rates. That means they're going to charge you to keep your money in the bank. And no one wants to do that. So people are going to want to spend their money. So now there's all this extra money in cash. They're eventually going to go negative. Now everyone wants to get rid of it. And it's going to drive prices like this last time for homes, cars, everything through the roof, and it will turn hyperinflationary. I believe that's whenever it happens.
Definitely. I agree with you. I definitely see that happening. But anyways, I did want to answer one of the questions. Somebody had asked, why does Vandy use so many confluences when it's, what did he say?
When trading.
No, he had, let me pull this bad boy
Sorry,
up.
I got off topic there for a minute.
No, it's good. People need to hear it.
But again, that's all trading. If you set yourself up right, you can catch the next win, but prepare for, the storm, I guess.
Exactly.
That could really be coming. At least I think. Not to be a doom and gloomer.
No, for sure. It's definitely coming. Let me pull this up real quick. Gosh dang. Sorry about that, guys. Oh, okay. Why does Derek have so many confluences if it's a game of probabilities? So this is a perfect example right here. So in the Trader Society Academy, I called an NJ buy. Why? We're on the 61.8. We're on a trend line. We have a shark fin. It's making a higher low, or a lower high, excuse me, or higher high into a lower high.
I'm a little lost now.
Yeah, sorry. Anyways, it's going with the trend. Because I risked 45 pips to catch 250 pips. And when you get entries like that, you can risk more. And like, let's say that I want to risk 5% on this trade for the pure fact that there's so many good confluences in this trade that I can easily make anywhere from 12 to 14% just on this one trade due to the confluences that are in the market, instead of having to chase all these different trades, right? Like, I'd rather be right, me personally, and this isn't how it is for everyone, I'd rather be right on 9 out of 10 trades where I don't get very much drawdown than, play this game of probabilities where it's like, well, it's at this level, it could drop off this level, or it could rise off this level. Like, I'd rather have the confluences match up with my trade so that I'm more confident in putting 30 lots, 40 lots, 60 lots on this trade. And hey, if I lose, I lose, but there's still a lot of confluences on that trade.
I mean, isn't everything probability?
Yeah, exactly. I mean, that's still a game of probabilities.
Everything.
Right?
Any investment you take, anything, right? Again, it's understanding. He understands why he did it.
Yo.
And why you called that, and you understood the risk. Okay, if I'm wrong, I'm going to lose this, but if I'm right, I'm going to make this, and I'm willing to take that risk because of what I understand.
Yeah, and you have to remember, I've seen the market move for the last 7-8 years. So I've seen this setup happen before. So for me, confluence equals confidence. So it makes me more happy when I'm in a trade like that. It's a daily time frame shark fin. 2-3 days, you can do the math. It's a good day. It's a good couple days. It's a good week. You know, that's what I was telling my students. Like, you don't need that many trades, and you can, once you get to that point, let's say you have a $600,000 funded account, and you want to risk that on that one trade and then take the rest of the month off. You just made yourself 24, 30 grand on that one setup because you just were patient and waited for all those confluences to happen. That's the way I look at it. Less is more to me. So I don't know. That's why I do it.
Yeah.
And it's not for everyone, but it's for me.
No. Yeah, exactly. You understand.
I understand it. And that's the most important part is I understand why I was in that trade.
Right.
And it worked out perfectly.
Yep. How many times people, oh, you should buy this because it's going to go, you should buy this because it's going to go up in value. You know what I mean?
Yeah.
Buy this coin. Okay, I'm going to buy it. You know, and then you buy it. You buy it, and then man, that's a scam because I just lost some of my money. No, you bought something you didn't understand.
Exactly.
You did, like, if you would have asked me because I understand it, you know, that's a terrible idea. What are you doing?
It is, you know.
You know.
There's many different ways to trade. You know, we all know that.
You bought Five Guys coin? Like, I don't know. I don't know. Whatever it is.
Yeah,
like,
I mean, there's plenty of them.
Okay. I just got Five Guys.
Man, Five Guys sounds real nice right now, man.
Swipe my card.
Let me have some, man. Where's that hamburger at?
You know? So, you just got to understand any risk.
Heck yeah. But anyways, you know, this was one of those fun, kind of different podcast that we had. We chopped it up and
very choppy. My bad, guys.
No, chopped it up as in like talked about real life stuff, and I enjoy doing that. And I think people, you know, need to be more aware. There's
for sure
a lot of fresh blood on the.
We've ragged on ourselves enough the last couple ones.
Yeah, you know.
So.
Exactly. So, you know, the thing you should have got out of this podcast is like learning how to manage your exposure when you're in a single trade.
Understand it all.
Yeah, don't go all in on a single trade. Never do that. That's just wrong. Unless you're doing something like taking a $10,000 account and willing to risk the whole account for one trade. But you got to be able to afford that. Yep. We got some heat for like doing that time.
My life didn't change over this.
Yeah, you know, if you got it, risk it, man.
Risk it. You know,
risk it to get the biscuit.
Exactly. I had to put rent off for a month, you know what I'm saying? I'm just kidding.
You had to sell the Mercedes.
Sell it because, oh, man. No, I'm just kidding.
It's a good time. Yeah. But anyways, we hope that you guys enjoyed this podcast. Don't forget to like, subscribe, and, you know, buy a hat or two. Yeah. You know,
This was my favorite.
Yes, the yellow rider. I don't know what we call it. It's good though.
All right, guys.
But anyways, we'll see you guys next time, and you guys have yourself a good weekend.